Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is December 27th, 2018. There's been a lot of volatility in the S&P and crude as of late, and I'm going to sort of switch things up a little bit and look at a market that is not quite as volatile. So we got lean hogs down here, the ETF being HOGS. And the reason I'm looking at that is we've got a mixed bag here when it comes to the trends. That's what this little asterisk shows. So we got the short intermediate down, but there's a basing that's going on with the long-term trend. The technicals are still pointed lower, but anytime there's a technical that's pointing in one direction and the seasonals pointing in a separate direction, it just simply means that there's probably something that's going to pop up here. And I see a couple of things that are of interest, specifically from a seasonal perspective. So if we take a look at the seasonal tendencies to lean hogs, the blue line in this case represents the 5-year seasonals, and you can see that the black line, which represents the current year, it's not using today's information. That stuff will be updated this evening, but the trend has been to the downside stronger than what the seasonal tendencies would show. But the seasonal tendencies are still pointed to the upside, and there'll be a continuation going into next year. And so this is where there's a potential for the market to really show a potential reversal to the market. The systems are still short, but because the market itself, we take a look at the 10 years, is showing the same thing, and across all the time frames you can see that they're highly accurate when it comes to the seasonal tendencies. In fact, seasonal tendencies for lean hogs is at the top of the list, the top 10. It's the strongest of all of the markets. So the seasonal tendencies, just looking at the 5 years again, that because there's a bit of a bounce here, may be premature, but because there's a bounce here, it's telling us that we should really be looking at the market a little more closely. So when we take a look at lean hogs on daily bars, you can see here are the daily bars, and it's right now sitting at a support level. That support level right now is at basically 59.68, and that's essentially where the market is now. It's at 60.675, but it's now touching or coming close to that of that lower level, especially on the low side. If we take a look at the weekly charts, they're essentially showing the same thing, where we have this major support level right through here. That's what we're up against. So if the market is going to base and do what the seasonal tendencies typically do around this time, they'll probably do a stop and reverse and start to head a little bit higher. The momentum is still to the downside. You can see with the elastic level, the power trend is also still pointing to the downside, and that bodes well for us because the systems themselves, just show this to you. This is a general look at what all of the different systems are doing with their profit and loss. Here's hogs at the very bottom here, so they've got a nice open position short, but things are changing in comparison to what's been taking place. If we take a look at hogs, let's see right here, you'll see that there's been some action as of late. With today, we actually went long the market, so we now have a bit of a hedge. We've got a short position daily bar, a short position daily bar, and the 45-minute is beginning to hedge us a little bit. So right now we're net short one position. But with this long position having taken place here today, and if I come to the trades list here, this is a list of all of the trades that went on during the course of the day, the entry and the exit. Here's the exits right through here. There was a short position that liquidated itself here, so that means that we were net short 3 contracts. We liquidated the one short position, And then we also, as I mentioned, we established a new long position. So this is where the portfolio construction comes into place, having different styles of trade with trend based, we got pattern based, we got swing based systems, and then we have all the different time frames, 45 minutes all the way up to weekly bars. In this case, there are no weekly bar systems here, but we do have them for all of the other markets. This being the case, we're beginning to unwind the shorts and establish new longs, because we're at that support level that I was just pointing out. And with that support level, if I can pull this up here, this on the weekly bars, which is at 60.858, so we're really very close right there. And on the daily bars, the lows have been touching that particular level, so we would expect that the market would have a bit of a base. If for some reason we don't hold this support level on either the dailies or the weeklies, well, then obviously it's got room to fall. The systems are short, and we then probably flip our positions and unwind that long position and maybe establish another short. But because the seasonals are projecting the market should head a little bit higher. I'm just pointing this out so that you can watch the market and potentially start to establish some positions yourself, and at least as a chance, have an opportunity to look at a new market that you wouldn't normally trade and take advantage of the potential little pop to the market that could be coming. And for those of you that are actively trading that market, just simply watch these levels because if we're able to hold here, you'll want to watch closely with what the systems are doing, where they'll probably establish some more long positions, thereby hedging us completely, and then ultimately start to unwind the shorts and establish even more long positions and take advantage of some more continued profit to what this market has already given to us with this nice little swing to the downside. And I'm going to conclude here with just a look at the open position pie chart. This is all of the different markets. You can see here are the meets right through here. They're making up a little over 10% of our portfolio right now. The energies and the equities taking up a large portion of our portfolio. That's why I've been focusing on those particular markets as of late. But there's just a nice diversification across the board with open position profits. This is the allocation. This is just the open position profits. And you can see that things are moving nicely despite the fact that we've had a lot of volatility as of late. The portfolio diversification that we're always preaching and having lots of systems, lots of markets is always a benefit. And that not everyone can trade this size, but the reality is that there are at least a lot of markets that are available to you. That's why I'm kind of focusing on the meats because of the fact that they're not as volatile as, say, crude and maybe the S&P, and give you a good opportunity to take advantage of a market that might possibly be new to you. And with the support level and the seasonals telling us that the market probably wants to base, not a bad time to be looking at some of these different systems and some of these different types of markets. But always think in terms of diversification as best as you can. And we will take a look at some new markets here soon enough. Thanks for watching. Bye-bye.